Hello, everyone. It's Alex Katudas, research analyst at Revere Asset Management. Today is October 20th, Wednesday. I'm coming to you live from Cave Creek, Arizona. It's 12:15 my time, or 15 after 3 Eastern time. It is during market hours. I had to get something done after the market, something with the house. As you know, being a homeowner, there's always stuff you got to take care of. But I wanted to go over this. I really want to put this bonus stock video out today, so you guys have it for moving forward. And this particular bonus stock, I want you guys to add to your watch list. We do have three current bonus stocks that I'm watching. I went over last week. You can catch that on our YouTube channel and just type in Revere Asset. Make sure you like, share, and subscribe. Press the big red subscribe button or put on the bell notification so you guys know when the bonus stock comes out. Or every day we have a video. Don does one, Hunter does one, Tim does one, and then I do the bonus stock videos. And then at the end of the week, Friday, we have our podcast, which we'll be recording Friday, and it either gets released Friday evening or Saturday morning. Before we move on to the bonus stock, here's our contact information. You can reach any one of us at the given emails. Just pause the video, take down the email, or you can reach us at 855 Real Wealth or 855-732-5932. Let's get to the charts. I want to go over the indexes real quick. This market action, so this is the NASDAQ. And as you can see, we had that follow through day last week, which we use. It's an O'Neill method from Investors Business Daily. William O'Neill is primarily the trading principles and rules that we use here at Revere. And so we've had a nice rally here. This digestion day today, it's pretty much flat right now. It may close, it could change. We could rally into the close or go down to the close. You'll just have to plug in the proper index to see what happened at the close. But right now, it looks like we're consolidating, which is actually very healthy action. Let's look at the S&P 500. This is actually up almost 0.5%, and we're nearing all-time highs. You would have never known like how rough things were if you're just an indexer. When I say indexer, you just buy a S&P 500 fund and you sit there. You would have never known there was a nasty correction. We are active, and like Don has stated in yesterday's video, or it may have been Monday, if you're nearing retirement, that could really be damaging because you put your life savings and all your hard work into your investments, and then if you have a 20% pullback or worse, like last year, COVID, and you're not actively watching your portfolio, you can take a really big hit to your portfolio. So we try to have proper stops in place and actively manage our portfolios so that you don't get hurt. If you're interested in more in that approach, please reach out to Don or Dan, and they can give you more info on that. Anyways, let's move on to, let's look at the Russell 2000. So these are the small caps. This digestion here that's been going on for, 9 months, since 8 months, since February. This looks good to me. It looks like we're starting to finally creep higher. If we can get over that 235 level, that will really help the overall health of the market. Because we want to see some small caps and mid caps, look at MDY, catch up to the big cap stocks like the Googles and Amazons of the world. MDY is like right there. The mid caps are this volume right here, the accumulation looks good. Maybe we kind of rest for a couple of days. It's been a hot week, so I wouldn't be surprised if we settle down a little bit. Doesn't mean I think we're going to go down hard, but it's okay to have a red day here and there. Can't just go straight up. It doesn't work like that. Anyways, let's go over the bonus stocks. So previously I've talked about Affirm. This is looking real nice. It's actually bounced off that 8 exponential moving average today, that pink line. It's holding that and around that 150 level. I can't be upset about that. It was extended. When I say extended, it's very high or extended off a moving average, a key moving average. So typically stocks, or historically, don't get too far extended off this green line, the 21 exponential moving average, 21 EMA. The other bonus stock from last week was Skin. This looks good too. Hope you guys added this to your watch list. I think this is a potential breakout stock, and it's new. I like it. I went over that last week. And then the last one that we went over, this was talk about a monster move. Since last week, I think we're up, and I'm up over 30%. This is talk about this is beyond extended. This needs to set up a handle here. When I say handle, where it goes sideways or even if drifts a little bit down here, you can see like what I'm kind of, let's draw a little trend line here to help you visually. Why can't I add that? Am I picking the wrong button? I'm drawing a blank here. Usually I have my TOS system to draw the trend lines. I use primarily, here we go, here's the line pen. What? Okay, anyways, imagine there's like the stock drifts a little bit to the right and down here, and it creates a handle and digest. That would be a really great sign that it's not being sold off and it's running out of sellers. So then all this buying down here, these blue bars, all this accumulation is actually from institutions, because retail traders tend to get shaken out easily. But institutions, they don't buy and sell stocks within the same week. They can't do that. And mutual funds, same thing. They bask into certain set of stocks, whether it's retail, technology, whatever, and they have to stay in that for a while. It's not like a Fidelity fund would buy Dutch Brothers and then sell it the next day. That's not happening. That's usually, you see that with like hedge funds or retail traders can do that. So I do like that this is signaling to me that maybe we are getting institutions in this. Anyways, let's move on to the bonus stock this week. This is a big liquid name, AMD. Everyone knows AMD. If you don't, it's a big designs microprocessors, a big chip company. They do graphics cards, what have you, for gaming computers and other industries as well. The growth is substantial, explosive. Let's look at the sales and the EPS growth. Look at down here on the left. This is MarketSmith, by the way. This is where we get all our data from for fundamentals. At least I do. Right here's the sales. Right here's the EPS. We're seeing triple-digit growth, and this blue line, RS line, new high, relative strength to the S&P 500. The stock is moving higher, and the thing that really caught my eye to add to my watch list was this double bottom. So this double bottom, what a double bottom is, it's a base. Okay, this is also another technique that Bill O'Neill had come up with that we use. So when a stock makes a high, it pulls back, and then it rallies into like a midpoint. Okay, and then it undercuts that. It comes back down and it undercuts the previous low. And then it rallies again. That is a sign that typically is a signal that it's exhausted sellers. So when you exhaust sellers and it bases and the market starts to move up after a fall through day, your odds of that stock going up are much better. So this pivot is 114.49. Add this to your watch list. This is strictly educational. Okay, I'm not advising you to buy this stock. If you want advice, please reach out to Dan, Don, or anyone at revereasset.com, and we can go over that and maybe even do a free portfolio review for you. We will do a free portfolio review for you. There is no, we're not selling anything here. This is, we're fiduciaries. We try to do the right thing for our clients and our viewers. So again, this is educational, but I want to show you this so you can kind of spot in the future what is a double bottom. How do I identify a double bottom, and where can I get in to profit in the future? And I think that this is a really great example of a bullish setup. Let's see, even look at that weekly. That looks great. It's tight digestion, and let's go over these averages too, so you know what these lines are. Again, the pink line is the 8 EMA. That green line is a 21 EMA, and this red line is the 50-day simple moving average. This black line down here is the 200-day moving average. Add those to your daily charts. I think that you'll benefit greatly, and it will really simplify things. You don't have to add too many things to your charts. That's another thing. I see a lot of traders, they add so many things that it almost gets so complex. You're gonna just make it more difficult. And trading's already so hard. Why make it even more hard? If you got something that's working for you, and this works for me, and it's worked for me in the last 10 years I've been trading and investing, why fix what's not broken? And for me, this is how I identify leaders and profit. And you got to remember, if you get into this stock, the most important thing when you buy a stock or whatever instrument you're buying, okay? Options, whatever it is, you have to set a stop. When I say stop, it means if the stock starts to go down, or your option, whatever it is, where am I going to sell it so I don't lose any more money? I like to use 3 to 5% stop losses. So on this, if you were to quickly do the math, if the stock's at 115, okay? So if I did a 5% stop loss, that's $5.75 from 115. Okay, so my stop would be about around 109.25 off the top of my head. Okay, so at least I know where my line in the sand is, so I can't lose any more, or I have a max loss I'm willing to take. Hope this helps. If you have any questions, please reach out to me at alex@reveraasset.com. Have an awesome day.